doing, mate?
You're not too bad, mate, you?
Yeah, good, thankfully. Been working today, mate?
Yeah. You've been working as well, have you?
I'm much, mate. No, I don't get much work in the week, really. Yeah, choose not to answer the phone as well.
Yeah.
Which is,
Whereabouts do you live then? It's a big city, is it? Like weekends and stuff like that?
no, not really, mate. It's quite a small place, but there's not many taxis here, really. Yeah, compared to, where do you live?
Like Oxfordshire, near Oxford.
Yeah, so I'm sure there's literally hundreds, if not thousands, of taxis around where you are.
Yeah,
There's
sort of black cat.
There's not many, really. There's me, pretty much south of Anglesey, and there's another company in the middle of Anglesey, and there's just loads of one-man bands in the north of Anglesey, which is holds about 67,000 people. So it's only about 25 cabs maybe for the whole place. So yeah, but I think I'm one of the best areas. It's lethal for tourists, and just literally over the bridge here in the mainland, the big city is Bangor, so that's where the main university student city is.
Oh, yeah.
Got a lot of students and stuff there, and that's where the nightclubs and stuff are. So there's 14,000 students there. Not much, and I don't really go for that. Students, they're so fucking lazy. They just want a taxi 3-4 quid up the road, and I've never entertained it really. I let the other companies run around with them, but yeah, it's done a big U-turn really with the business, with the nightclubs opening now. It's great. Before, when COVID was slowly coming out, I was home for like 11. Now I'm back to getting home at 5:30, 6 in the morning.
I remember COVID. I was on so I got to do gas as well.
Yeah,
like a plumber sort of thing. And I was on the road during COVID. There was just no cars on the road.
Yeah.
It's quite nice for me, but
annoying now, isn't it? You're busy with the plumbing and stuff, yeah?
Yeah. I've got a new job at the moment, so I'm kind of getting back on time, which is quite nice. I've just been offered a different job, but it's a bit more work. I don't really kind of want to do it because I kind of want to focus on this more.
Mm-hmm.
I don't want to get back to kind of like before I was doing like the on-call and stuff. I was getting back at like sometimes 11 o'clock at night, and it was hard to fit this in. But the job I got at the moment, I was back at 5, which is quite nice. Gives me a bit more time.
Did you work for somebody then, yeah?
Yeah, I do bits of my own as well, so I do sort of half really.
Yeah.
I nearly kind of went on my own, and COVID came along and kind of ruined it really.
Mm-hmm.
But I know a lot of people probably done better during COVID, but with the gap with the plumbing and stuff. But yeah, I don't know. I'll give it a little bit more time and probably concentrate on this, I think.
Yeah, of course. How are you getting on? Do you want to share your screen, mate? And
I don't even know how to do that, mate.
Yeah, I'll make you host first.
It's just kind of, with me, it's kind of getting the entries and stuff. I'm kind of sort of marking the direction where I think it's going to go, and it kind of goes that way. But it's just kind of setting that entry up, if you know what I mean.
Yeah. Okay, at the bottom of your screen, you should have a green block, which it says share screen.
Yeah. Probably right. Right one? Is that showing you in there? No, that's not.
No, I can't see anything yet, mate.
It's still flicking. Oh, there you share there. I've got it.
There you go. Cool.
And then this is a bit of a mess, this one, mate. I was just kind of looking at this one, but I did get these ones here quite well. See?
Yeah.
So I've got all these different ones here, but this is the one I missed. I just didn't reach it.
Okay.
Probably went a bit too high on it, but I was kind of hoping it'd come down here.
Okay. We're on the 4 hour. Can you do me a favour and just turn them lines off?
Yeah, I can't remember how to do it.
Should
I
be
basically went onto one of the videos on
double
the
click.
IM.
You just double click on them, or if you right click on them. Yeah, session breaks. You can see the blue tick. That's blue box.
Which one is it? Sorry.
Session breaks. 4th one down in the actual menu. Yeah, there. Untick that on the left. Untick it. See the blue tick.
Yeah.
Thank you. Can hurt my hands.
Yeah, that's quite. I saw a video. I think it was IM. He was saying about putting them on, and I kind of afterwards I was, take them back off. But yeah, I think it's things like this, like the entries and stuff. So I kind of thought it might come down to here, but I kind of missed it.
Okay. So, why are we looking for a buy from there?
But from here,
Yeah.
well, I thought it'd come down to see this level, and I thought it might just change direction and head back up.
Okay. Why do you think it changed direction?
I don't know this one now. This is an old one.
Look at. Start thinking about market structure. What's happened? You're right. Your analysis is right. I'm just asking you why.
Yeah.
So if you look at where are we? August. I'm just looking at the date at the bottom. August, yeah, around there. So
Yeah.
go right up, go right to the top where all them candles. What was all that candle there? So if you look left, what's it done? So pretty much where your black line is, yeah, that black line there, they're going through the middle. If you go left a bit and we look on the 13th of July, 14th of July, 15th of July, that sort of area. Yeah, 13th, 14th, 15th of July. So them candles there in that area.
Yeah.
And then we get a drop down into the 20th, 21st of July.
Yeah. And
the rise up. What happened from there upwards? Between there and the 3rd of August, what happened? Think about market structure. All that run there, what's happened? What has that run done to the candles on the left? It's broken structure to the upside.
Yeah.
Yes, all them candles, yeah, all them, yeah, all above and all everything you got to the right. So you pretty much where your black line is. Don't know whether are you using that. Just move that slightly.
I think they were probably old ones. These ones from over here. I think I've just left them on.
So let's just mark that. So the candle on is it the 10th or 11th of July? That big green up candle.
This one here.
Yeah, the second one. So 2 again.
This one.
The high one. The higher one. The highest one. There you go. If you stick a line on top of that.
I'll move this one up because I don't think that's an old line.
So now that is your most current high, right?
Yeah.
Yeah, obviously when we were looking at that, obviously we didn't know anything where your cursor is now. Anything to the right of that, we didn't know that was going to about to happen, right?
Yeah.
So on the, is it 28th? So the 28th, 29th, yeah, around there, keep on going, yeah, up there. As soon as that candle closed above that black line, what does that mean? It's broken structure above.
Yeah.
Yeah, so therefore, where did that move start from? Again, you're right, you marked it out.
Yeah.
That down candle on the 21st of July, last down before the up move. That candle there, yeah, that one, that's your naughty boy. That is what has created all that move. Yeah, broken structure. What are we waiting for then? For the pullback? Again, you're correct. You're perfectly bang on the money. It just didn't trigger for you. So were you
Yeah.
looking at? So that's why you were waiting for it, I'm guessing, to come back into that area to push up for another buy again. Your analysis is perfectly right. It's so that big buy you've got that you missed on the that's quite recent, isn't it? 24th of August. It's today, that wasn't it? 2 days ago. You missed it.
Yeah, this is what I set up. I did put an alarm, but the alarm didn't go off on my phone. Because obviously didn't reach it.
Yeah, it didn't reach it. Yeah, yeah.
I probably should have put one a bit higher really, but
yeah. So,
I kind of see it's kind of still missing, isn't it?
yeah. So my line would be around there, halfway
Yeah.
of that alarm is very, very low. So you must have seen something down in the bottom. So if we mark out,
I think I just thought it'd probably come down, and sort of go just below this level, but it's obviously just filled this in, hasn't it, and just turned around basically.
it's rejected off the 4-hour candle. So that red candle that was the last down before the up move is that one. It's rejected off there.
Yeah.
Area.
I probably looked at the wrong one. I was probably looking at this one. Yeah. I was just worried it might sort of come down and take me out.
Yeah, that's not your down candle. That's an up candle. So that wouldn't be of any interest to me at all. So you want the last down before the up move, and then for it to come back in, or vice versa. When you're selling, you want the last up before the down move. So in this case, that's exactly that one. That is your most current down move.
Yeah.
That created that break of structure. So there's money sat in there. So obviously, if we mark that out, I think you marked it out of you, the light grey. Just above it, not that one, that one above, that one. So that seems like it's sat just above that body of that red candle.
Yeah, I think these might be old lines. I don't know why I haven't marked it, but yeah.
Yeah, there you go. So leave that one there, and then what you want to do now is start dropping it down from the 4-hour to the 2-hour, and see if you can get a tighter stop loss, and see if there's anything else in there. You scroll to the left and see what's in there.
It's here, isn't it?
Yeah, it's that one now. Yeah, so that's the most current. Not much change, so just do the same thing. Drop it down to see now. Look how it's rejected now. It's a lot nicer, isn't it? Look where your price was currently 2 days ago.
Would you still move it down? So move down to this one now, would you?
Yeah, so this would have been perfect for entry-wise sort of thing. Well, not entry, but analysis. If you look at your 2-hour candle now, if you just hover your cursor over that red candle, and just follow your cursor, that dotted broken line, all the way across to 2 days ago, price is literally rejected in exactly the same area.
Yeah.
Off that candle, away from it. So that was definitely the right candle. So you could have taken it from there. So if your alarm would have been above that, you obviously got notification.
Yeah, I think I was just worried. This is the last down. I think I was just worried it might come. I think sometimes I'm looking at this because it's lower. I just think it might just go a little bit lower and take me out, kind of thing.
Yeah, so it won't go. So the one that you just chose on the left.
Yeah.
There's a 99% chance it will not go to that one again, because you see the candles where we were concentrating on then, that red one to the right.
Yeah.
So 2 candles to the left of that now. Yeah, them 2 wicks to the right. Yeah, them to the left now. Them 2 left candles. That one and that one. Yeah.
Yeah.
What have they done? That, remember, your candles are balloons, and they are needles. They are pins. Them 2 candles that you were just on then, they have already popped that candle to the left. That big red one to the left.
Because it's come down. Yeah.
Yeah, and popped that balloon. Yeah, that candle basically to the left that you're looking at. Therefore, that is now not valid. You see the big red candle? So it's like 4 or 5. Yeah, that one.
Yeah.
Yeah, so then needles have come down and mitigated out of that candle already. Therefore, it's not valid. So forget that. There's nothing there. The money's gone. Yeah. So where was the last down before the up move? That one. So that's our concentrating point, and it's not broken structure because body has closed above that bigger candle on the left.
So I've been looking at the wrong candle, haven't I?
No, you're looking at the right one, really, mate. Because on beforehand you were on the 4 hour. So within that 4 hour candle, you've got all that price action basically just fitted into one candle. And that's why it's important to chop it down. So
Yeah.
that is most definitely the one you wanted to go off. So if see your entry point, your risk to reward, the green and the red, all the way on the right hand side. Yeah. So if you move your entry point now to that 2 hour candle basically. Yeah, and then move your stop loss to, there you go, just below the wick, just below that black line. Go down a bit. There you go. So that was, you could have even taken it a bit lower, your entry, to be fair.
You go below, sort of below those greens kind of thing.
Your stop loss, yeah, your stop loss is good there. Depends how aggressive you want to be. If you want to be extra safe, you could have put it under that literally that most bottom wick, the very, very low wick, if you wanted to.
What I'm doing, I'm using sort of play safe, and I'm going below this.
Yeah, you could have put it under that wick there if you wanted to, if you'd want to be very, very safe. But that affects your risk to reward, obviously. Yeah. But your entry, you could have dropped in your entry is slightly lower. Yeah, so try and mark out 50% of that candle. Just do it by eye now if you want. Yeah, so that's about 50%. There you go. So you would have been a little bit of drawdown, not much, and that'll take to profit.
Yeah. Yeah, it's just those entries that I was struggling with, but yeah, I can see what I've been doing there with that.
If you drop it down to the 1 hour, you may be able to get an even tighter stop loss. Maybe scroll left and see what's going on. Pretty much the same.
Yeah.
Yeah. So now that big candle that we were looking on early on to the left, it's kind of fizzled away. Yes, there's two separate big red candles now on the 20th, just after the 20th of July, isn't it? Yeah. To like 8 candles to the left, got 2 red candles. Yeah, them two, yeah. So that was the big fat one we were looking at early on, which was void. Obviously, the candles just before the 22nd of July now, back to where we were before. They've popped them candles. I've popped that body. Yeah, so they're pretty much void.
Would you count that as the last down here then?
No, the next one. So 1, 2, 3, 4, 5 across. No, 5. Go 3 or 4. Go to the right. Yeah, 12 o'clock. I think it is midday on the go right again. Keep on going. 5 or 6 candles, and again. And keep on going. 1, 2, 3, 4, 5 candles. 3, 4. The other one. That's one. That is the last candle.
Yeah.
That went down before the up move.
Yeah. This one is. It went down and went back up.
Yeah. So see the next one there, and that by itself broke structure because them sort of I don't know how much it is. Let's just say 12 candles, 15 candles from where you are now, and then just go pretty much back 12 candles. Them sort of candles were in a bunch. What happened? That big green candle, 1, 2, 3 to your right, obviously broke out of that. Yeah. That is a break of structure. So now you know, all right, we're looking to take it upwards. Yeah, so you could have had an instant pullback, but obviously didn't come back straight away. It would have done on a smaller time frame. So we just have to wait. How long? 21st of July, nearly a month, over a month, for it to come back into that area. It's happened now, isn't it? 2 days ago, or is it today? So yeah, for example, see the big green candle where you were just at now. See the slightly red one just to the next of it to the right.
Yeah.
That a lot of people will get mistaken by, or the last down before the up move. It is in theory last down before the up move, but it's not. There's no significant reason for it to be there. It's just sort of chilling out. doing nothing. It's not protecting anything because the IPA, the imbalance of that big green candle that you were just on, one candle to the left, that is protecting that candle below, the last red down candle before the up move. So always when you see imbalance, it's a 99% chance it's protecting that last up or last down before the last the institutional candle, basically.
Yeah.
So that's like a roadblock, basically. So people would say to me, "Oh, what about this one?" Such as that little tiny little red one there to the right. Yeah, it's not doing anything. It's just chilling there. It's just a candle. There's no meaning to it. It's just a pullback. Whereas the big red candle, so like 3 down, that was the big one that pulled down first, where the banks sold down first, and then they pushed price up. So therefore, they've got money left in that red candle. So they want to come back to it to mitigate.
Yeah.
The analysis is literally 99% there, mate. It's just the entry.
Yeah, and some of this is all sort of old stuff, so the lines and stuff, but I've not deleted. But yeah,
So
I think it's because I've probably been going below here just to be overcautious, and I've probably been marking this by accident. Sort of.
Yeah.
Probably meant to be this one.
Yeah, that is the most current last candle down before the up move. So if you dropped it down to maybe try a 15-minute. Yeah, there you go. So if you zoom in a bit, I can't see. Yes, so do we get break structure? I think so, yeah. If you just go to the scale on the right hand side, so make the candles larger.
That's actually just over here.
In the scale, yeah, just whether you got your blue and red sort of squares, yeah, hold that, drag it up, hold down, up, I think it is. Put your finger on it, click it, and drag it up. Make your candles bigger, keep going, keep going. There you go, yeah. And just move it up, there you go, thanks. Yeah, so you see what happened on the, what date we on? So just after your alarm, see the little alarm symbol, that red candle, yeah, that one. So that was your liquidity sweep. So what happened from there was it took out the liquidity.
Yeah.
Yeah, to the left, basically. Stop losses to the left, so it's taken that out and then pushed up higher. And then what has happened then is it's broken structure. So if you go back to that red candle where you were, yeah, 1, 2, 3, 4, 5. If you go 6 candles left, that high there, yeah. So if you mark that out, you see that black line, the top black line.
Yeah.
Bring that down a little bit, just on top of that body. Yeah, so there you go. Now, as soon as that red candle comes down, it pushes price where we were before, just the big candle, this liquidity sweep.
I don't know, yeah.
That one. So what happens from there is takes out liquidity. So this is part of Wyckoff. Okay, so it takes out liquidity and then pushes above. Does it take out that high? You know, where we just marked that black line? Does it break structure? Not there.
No, it's a bit further.
Ever so slightly there, but most definitely a bit further across. But most definitely break structure there. What happens then? What needs to happen now?
Comes back, isn't it?
There you go, a bit further down. So which candle was the last down? There you go, perfect, there. What happens? Look where that lines up with, coincidentally, you got your black line perfectly in place already. That black line lines up with the body, the top of the body, the open of the body of which candle? Our down candle that took liquidity.
This one here.
Marked it out already, yeah? So maybe that is exactly why you've got your alarm there, which would be a great trade.
Yeah.
That was as simple as it is. Okay, it takes liquidity, it pushes up, it breaks structure, comes back. How many times? 1, 2, 3, 4, nearly 5 times. See the wicks in that area around, bear in mind it was what, 5 in the morning, is that? No, 10 in the morning.
Yeah, so it's sort of 6 here and then 12.
6, 7. So that is, what time does London session open? 7 a.m.
Yeah,
So that's your London Open. That's done all that noise. See, and then Wicks there between 6 and then 8 or 6 and 12 pretty much.
yeah,
Retested that black line. 1, 2, 3, 4, 5, 6, about 7 times. Yeah, so you really could have had 7 options to enter there.
yeah,
That's as pretty much that's the basics of smart money. Yeah, you just need to be able to identify liquidity sweep, which was that red candle down. We mark it out. It pushes up, breaks structure, and wait for it to come back down. As soon as it does, we execute, we take the trade.
yeah. So you mark this, and then when it comes back down,
There you go. Yeah. The banks have come back, they're broke even. They're not in their overdraft anymore. And away they go.
Yeah,
On a buy.
yeah, yeah. I can see what I'm getting wrong now.
Anything else you were looking at?
I think I was looking at this today. I don't think I marked it though. So let's get back. So get used to this as well.
If you hover your cursor in the middle of the screen at the bottom or towards the bottom, you should have zoom in. There you go. See that little right thing, that little toggle that twists to the right, on the right. That one, click on that.
Oh yeah.
That's the whole thing for you.
Yeah, I think it was this one because I didn't know which way it was going to go. I was trying to work it out. Because it's still. Because obviously it's come down, hasn't it? But
yeah,
it's going to keep going. I'll come back up for these sort of thing.
Yeah, that's a good setup, mate.
Yeah.
Yeah, because it's clearly broken strongly to the upside. What's that purple, pink box you got up there?
Let's see. I think I was probably
Imbalance, isn't it?
yeah. It's quite far back on it, but
Yeah, well, there's nothing wrong with it. What was it, GBP CAD?
yeah. It was only kind of a quick look at this one. I sort of did this. I don't know. Half an hour ago, probably longer.
What I would be looking at is see. Wait there, let me try.
Break this first sort of thing.
See if I can. Should be a pop-up on your screen. If you just click on approve.
Yeah.
There you go.
Sorry.
No worries, it's fine. So what I would be looking at is we've got kind of equal highs in here. Yeah, so what it has done is it's come up and taken that's your liquidity sweep here.
Yeah.
It's taken all these highs out. There's even more here. Okay, so it's taken that out and then dropped, but it's still not broken structure because it's not passed here as of yet. So this really, I would just keep an eye on it and see how it reacts.
Yeah, I've not put a trade on that. I was just kind of marking it up.
Just see how it reacts from here. So it seems to slow down currently.
Yeah.
It won't move much now because it's a London pair, it's a GBP. So 7 in the morning, you should see reaction up or down. But what I would be looking at is why haven't you got options?
Yeah, it's not.
So that's your last up. For the down move, it took out liquidity. So that if so this I would leave alone because I'm not overly sort of keen on market structure, because here it's obviously clearly broken above all this. So we got this here, this high, and then obviously got a high, got a low, low. And at the moment that is still above there. Yeah, don't confuse that as that's how, because people will think of this as that there. So from here to here, that's your range. Okay, people will mistake this as a break of structure to this. Yeah, it's still within our window of here. This is the box that we're playing in. So until this ideally needs to break below here for me to have, most definitely it wants to shoot down. But here it has broken out of our zone. Yeah, so I would think it's obviously done that on purpose. So I would be looking at, we have I would be looking at, if it wants to break, it needs to break below here first.
Yeah.
Yeah, for me to take a sell from here, from above here, sorry. I want it to push and break this here, the body here. That's your first clarification of the market, right? The market wants to push in the opposite direction, because at the moment it's obviously clearly bullish, it's pushing upwards. Yeah, this is where some people get confused with market structure and what the banks are trying to do. Yeah, the banks do this on purpose, but it's what it is doing is people think, oh, it's created a new high. What it did do is kind of sort of dangle the carrot for people. It's like, yeah, we're still pushing up. Retail traders will carry on pushing upwards, whereas the banks will take this down. They will then come back into this area, and then they will drop further. So, because what we have here protecting this candle imbalance, so the market needs to come back up into this area to fill it out. And then if we take, is that your fib? If we take the fib from high to low, to use the fib, is it right? Is it set the right? Yeah, it should be. To use the fib at all?
A little bit, yeah. Yeah.
What's your level tonight? 38 points. If it's too much distraction for you, you can take a few of these off if you want. You don't need, you definitely don't want that one. 4.2. Don't want that one. Is that 88.6? Yeah.
0.236.
236. Don't want that one. 0.5. So 0.786.
Yeah.
Yeah. Okay, so you definitely need that one. 2, we don't need that one. 1, 61.8. 60, you need something else. Where's mine? You need 50%, which you've got, 61.8, which you've got, 71 you need. Is there a 71 there? No. Put this back on and change it to 0.71. And 78.6, you got that, and you also need 89.
Just changing it.
0.89. There you go. So colours might confuse you. See what the colours are. Oh, that's my background's on. So 61.8 black. 171 is golden pocket. 9 is golden pocket. 78.6 is golden pocket. And 50% is missing. Yeah, that should be it. So let's save that as okay. So top of that wick, so high to low. Yeah, and obviously the retracement we're looking at back into between the 71 and 89 area. So that is your golden pocket area. Okay, that's where it's not, it's not a Bible, I don't swear by it, but it's very, very, very accurate. It's just an added confirmation. So it's a retracement tool. So the price should come up back and bounce off perfectly off one of these levels. Yeah, I wouldn't go for the 89 because it's pretty much too high, if you like. It may do, may come up to there, but in this area, it's quite quite popular. So around this, it's that 78.6, isn't it? Yeah, would be roughly 50% of this candle as well. Yeah, so last up for that move. For me, it needs to most definitely break that one, if not this one, to show it's broke structure and it wants to push down. Yeah, so if it does break, I want it to come back up into around this area. So if it came down to, let's say, even further down to, let's say it did come down to around here. Okay, still if it came down to there, price, to maybe it'll be tomorrow now. Yeah, and it still comes up into this area. Yes, it doesn't have to be perfectly, it's just anywhere within this area. That's why we don't sort of swear by it. It's just a something we go off, just an added confirmation really. And if it works, it works. If it doesn't, don't you know, it's not an issue. And to sell off from there. Yeah, so market structure is the most important thing I could recommend to everybody and anybody. It's very, very, very important, market structure. So we're on the 4 hour now. Can we get a tighter stop loss? So if we were gonna enter from here, because let's just go off. So yeah, for this reason, you could well buy from here back up into this area and then drop. Yeah, so if I drop down to, let's say 1 minute, let's see what's going on. 1 minute. We're obviously in this area at the moment. Yeah, so let me just, there's a way to hide this, isn't there? Hide it. So, hide all drawings, yeah. So, what I would be looking for here would be a break of structure first. Okay, so if the body so far has broken below this body here.
Yeah.
Yeah, so to me, it's still pushing down. For me to change my bias, it would need to break, oh, for God's sake, let me go back. Yeah, so it needs to break there, which it seems like it's just literally just has done. Ideally, these, or well, to be fair, all of this, to be honest, need to break all about. This is very messy. This is really wicky and very messy price action. I wouldn't.
I've tried it.
No, I know it's been spread, isn't it? Yeah, so that's probably why it's been going mad for the last hour or so. Because look at the difference between here and then we hit 22, yeah, 10 o'clock, yeah, spreads go mad. See the wicks, just literally fucking crazy. So I would most definitely wait for this to all settle tomorrow morning before getting in. But if it breaks above here, so if we see this sort of action pushes up, comes back down to where? Around this area. Because in here we've got our last downs before the up moves, especially this one here, that's your last down before the up move. Yeah, because there's an imbalance here that's protecting that. Zoom in. Yeah, so this last down pushes up, it's come back down, popped it, so that's not valid. This last down here pushes up again, so that's the break of structure in itself, because this big green candle here pushed up above these bodies here. It broke the structure, come back down, popped it again, so you could have entered twice, anywhere there really. Yeah, so the most recent down is this one. Down before the up move. This is just literally broken structure here. Yeah, so it looks like this one to come back down already. Yeah, back into this area and buy all the way back up to what we were talking about earlier on. Back up to into this area.
Yeah.
So if we went on back to the 4 hour, so if we were looking at entering from this area, so that's the start of the body of this big green candle. Where is your that one? Come on, yeah, short position. If we were looking at entering from here, yeah, this body, we would need to have our stop loss. Stop loss at the moment above that wick. Yeah.
Yeah.
Where we're taking this is back down to at least these lows here, target lows. Is that 2.8, is it?
2.65.
2.6, okay. So this is on the 4 hour. It's totally fine because if you're using correct risk management, it's still 1% of that. It's still going to be the same as 1% on a smaller time frame.
Yeah.
It'll work it all out for you. But what we do have now is, come on. That right one. No, horizontal ray. I need horizontal line, horizontal ray. Yeah, what we've got now is obviously up here is the 1 hour candle. So now in theory, this is the last up before the down move. Okay, so what we can do now is we can move and adjust our, so that's going from a 2.6 to 1 now. Let's adjust it to up here. What we're playing with now. 7.8, is it? 7.6.
Yes, 7.6.
Yeah, so you're just getting a tighter risk to reward option. Yeah, take it back down to there. So obviously you're risking £1 to get a £7.80 back. Risking 1,000 to get a 7,800 back. Can you get it any tighter? Again, it depends how aggressive of a trader you are, how tight you want it. So 30 minutes, we still get exactly the same. It doesn't make any difference. Yeah, so chop it down again. 15. Can we get anything else out of it? There's a tiny candle up there. Can I see that? There's a tiny candle up there. It is, isn't it? Yeah. That candle there, we can now And this is amazing risk reward, really. That now, in theory, is your last down before the up, last up before the down move. So let's just mark out what a stop loss would be above that wick. So now let's see what we've got, what we're playing with. Price. Now we can now put, what was that, 7.6. So now what we're playing with, that 26, 24,
34.7.
34. So now you're risking £1,000 for 34 grand return, or 100 quid for 3,400. Yeah, because if it doesn't get into there, it's just kind of tough. Unfortunately, this doesn't happen. But you know, they are fantastic when they work. Also, your risk to reward is very, very tight. Yeah, so you do kind of need to be more accurate than beforehand. But what I found was I used to enter down here. Look at the difference between there and there. So this obviously line across was our 4 hour, right? So if we entered here and it took it all the way back up there, that's quite a fair bit of drawdown, right? You obviously being a negative. Yeah, so again, it's kind of the things, it's up to you. It's what you feel comfortable with. You know, sometimes I've waited for it to come up to this area. It's maybe just got up into this area and then dropped 400, 500, 600 pips. If it happens, it happens. But I know there's another 68 different bloody setups that week that could come in. You know, you think you're risking only 1,000 for, you know, 34 grand.
Yeah.
I'm sure if I said to you, well, you missed that one, you missed that one, you missed that one. If I said that to you 60 times, but on your 61st trade, you took it and it entered and you made 34 grand off it, I'm sure you'd be willing to wait another 60 times.
Yeah.
Yeah, it's just very, very frustrating. And it's just all down to patience. Everything in trading is patient. Yeah, so that is entry wise, but 1% of that, or 1% of that, you just need to work out what the pips is. So if you get your ruler, you measure it, that is a big stop loss. So 77 pips. Is that 77, yeah?
77, yeah.
So yeah, I would never ever trade that. So if we were looking, well, you could do, don't get me wrong, but again, it'll work it out for you on the calculator if you've got one. So
Yeah,
that was
top left.
Let's say 80 pips from there to there. That's far, far, far too big for me. But if you wanted to trade that and you put in 80 pips, it will work it out lot size for you. Yeah, at a smaller one. So let's say just maybe, let's do it properly. It's up here. GCAD. What was the pair? Yeah, it was GCAD, wasn't it? Currency, risk to reward. What you on there? 3%? 2. What have you got in there?
What's that? 2%.
2. Okay, so your stop loss would be 80 pips, right? Calculate. So it's not even letting you.
Yeah.
Yeah, because it's going to blow your account basically. Yeah, so because what's your account size? 500. So it's not worth you doing it. But if we, because if it went wrong, it'd blow your account basically. So if we went back up to here, and measured that from there to there, what we're playing with now, 10 pips. So let's see if this works. 10 pips, calculate that. So there you go. It's giving you an option of 0.10 lots to play with, or 0.13.
At 13, yeah.
Yeah, 0.13 lots. Obviously, you put into MetaTrader 0.13 lots. Then away you go. Yeah, so obviously, when you start building your account, let's just say you've got 13,590 quid in there. it's now gone up to 3.4 lot size.
Yeah.
I don't know how, if you understand how it all works, you need to times that by 10. Yeah, so 3.4 times 10 gives you 34 pound of dollars in your case, currency. $34 per pip. So now if we were looking at this whole move, as from if we entered up there, down to there, that was that 180, is it?
330.
330 pips, shit. Okay, so 330 times 34. 330 times $34. So that would give you 11,220 quid.
That's right.
Yeah, so that's the difference between. So whereas before, let's see if it worked with an 80 pip stop. So it will work. I'll just give you a less. Yeah, so now we're playing with 0.4, right? So if you did now 330 pips times 4.40 times 330, you're now getting 1,400 rather than 11 grand.
Yeah.
So that's the difference, and that's exactly why I like to play with tighter stop losses.
Yeah, it's better to do that.
Yeah, well, you can take 1,004 all day long, and it's still good money. But would like I say, would I rather just wait for a fantastic setup to come along and earn 11, 12, 15, 16, 20 grand? Like Sean was trading this morning, he was up just shy of 10 grand on GU, because the lot size he's playing with, same as mine, got the same size account. Yeah, so he had a tight stop loss. He caught that big drop in GU.
Yeah.
When you get to that level, that's all you need. Yeah, really, because I don't know. Yeah, you were on my session last night, weren't you? All I would go for would be 20, max 30 pips.
Yeah.
If this was my trade, let's just work out 30 pips from there down to 40 under 30 pips. Okay, so if I was playing with that and 30 times 34, yeah, that would be,
that'd be enough.
So there would be, that's literally a tiny move, right? So that would literally be just over £1,000 for me from there to there.
Yeah.
And so that would be my first trade I would secure, and then I'd have a second trade running. Probably I would take it down to, probably back down to here, or maybe even here. Yeah, with a tight stop loss behind it. Because 11 grand is nice, but it can also take you a long time to get there. It's just, I'm pretty confident if it ejects from here, which I'm sure it will do, it's most definitely gonna, like, for example, let me try and find you an example of, yeah, so this is let's say this here was your last up, for a down move, came back in to mitigate. Let's see how much it drops from there down to there. Well, there's still 100 pips actually. Is it 90 pips, 100 pips? Yeah, and then broke up. So it clearly didn't want to carry on going down. So I would have easily smashed my 20 pips in there. Yeah, so what I'm saying is obviously this is just a pullback that a lot of people would have tried to trade this all the way back down to maybe down to here. It clearly didn't want to do that. It's obviously come back down, done 100 pips, which is still great, and then pushed back up even further. So I could have been in and out of there twice. It got my 20 pips from here down to 40 pips. Like 20 pips is tiny.
25, 20.
About there. From there to there, I've made £1,000.
Yeah.
Yeah, you can see how fast that moves. What are we on a 1 hour candle? Let's drop it down to, let's try 30 minutes. So if we're looking at this here, last up, or down move, came up, stop loss just about kept us in. Stop loss would have been above here. Again, if you wanted to be safe, you could have gone above this one. Yeah, a bit higher, bit more room to breathe. But like I say, if let's zoom in a bit. Here, last up, fall down. Yeah, come back up to mitigate. And so I entered here. Let's say, for example, yeah. So I would have from there to there. I would have done.
Yeah.
I'd be done my 24, 22, 21, 20 pips. Literally from there to there. How long did that take? To say 3 hours there.
Yeah.
3 hours. I made £1,000, £333 an hour.
Yeah.
Basically. And that's playing with whatever lot size. If I would have put a second trade on, I would have got it down to, let it run down to there, which would have been, was that early on 100 pips? Was it a little bit of drawdown, gone to negative a little bit, come back in, break even, draw down again, going into the red, negative, and drop down to here for 95 pips in one day, 19, just under 2 days.
Yeah.
That would have been 91 pips times 34. Yeah, another £3,000. So from there to there, I made £4,000 in just under 2 days.
Yeah.
But
Great.
the important part was literally tiny. Right? From there to there, 20 pips made my £1,000. If I can do that, what, four times a week, 16,000 a month. Was that 160, 176, but it's close to £200,000 a year, isn't it? Thereabouts. Yeah, obviously that's with my account size now. So by let's say 6 months from now, I'll be playing with even bigger and bigger lot sizes. Yeah, don't get me wrong, I lose as well. We all do. It happens to us all. Yeah, but this is, I don't know how to put it across to people. I don't think people understand this was not the correct move. The banks obviously were wanting to take, but I can still capitalize on that tiny little move. Yeah, because obviously then it clearly started to push up in the opposite direction again. So this move here is rejected from there because there's still money in there, still money sat in there. Because if we took your little line, right, trend line. If we took, so this is a perfect example of what you should be looking for. Okay, so what is that? Equal highs. You know, liquidity is sat there. What is this? Liquidity sweep.
Yeah.
And then what happened? This was the bad boy that pushed up, and then the little boy told these little bad boys to go and break structure. Yeah, so that in theory is still a little move that did happen. There's nothing wrong with that, and obviously we could have capitalized here, taken a trade in and out. Yeah. So that is just exactly the same on the 4 hours, on the daily, on the 1 minute. That's what you're looking for. So the equal highs taken out, broke structure, took obviously all this price action down here, took out all this action here. So it's clearly broken structure. Yeah, broke down, came back up. So bear in mind this is on a smaller time frame. Do you trade all these pairs here, by the way?
No, not all of them, no.
Yeah, trying to narrow it down to.
I kind of sort of just been looking through some at the moment. I'm trying to find the pairs I like. And then when I kind of find the pairs I like, I'll probably just delete the rest.
Can you see my screen now?
Yeah, that's it, yeah.
Yeah. So looking for. Yeah, that's another example of here, last up for down move. It came back into it, so let's just mark that out. Yeah, bottom of the body, last up for down, which is wait. That perfect. Go straight into it, pin perfect, and dropped for how much? 205 pips. You drop the last digit, by the way, with gold, if you don't know. So from there to there, but gold is points, so it's in theory 20 pips. So again, that would be my trade. It done. What it did do, obviously, here we can clearly see it's pushing upwards. So it's rejected off that candle and also that candle. But which one's going to win? Market structure again, because it's pushing up. Right. So again, like I was saying, we can capitalize off this. We push down. What did this little wick do in here? Let's just delete this for you now. This wick came down into where? Look left.
Yeah.
Perfectly. So that was a trade that you could have. That was literally identical to your trade that you showed me early on. Just obviously this has taken a shorter time to do it. Yeah, this is so clean. Like before, the one we were looking at, was it GU? Yeah, GU, wasn't it? That we were looking at when we first started. That is just so clean. Yeah, so nothing nothing here in front of it, nothing close to it. There's a big gap in there that needs filling. Yeah, obviously it came straight in, filled that imbalance, rejected off that candle, and away it went. Yeah, but we could have caught both ways, right? Because I know there's a candle here that's holding money. The banks have pushed price up to push price down. So we came back into this perfectly again. So we could have entered here. If stop loss there, where do you want to take it to? Where's the last down before the move? So this is a POI, point of interest. Yeah, so that would be my target. It literally just about perfectly took TP. Not a great risk to reward, but what this is on the 1 hour. Can we chop this down and get something better out of it? 30 minutes. It would have been up there. This is a prime example of what I was saying early on. If I waited for that little tiny little candle, did price come up to there? No. So I could have potentially, I didn't take this trade, but I could have potentially lost all this because I was too greedy and just waited for all that. But if it would have come up, it went from a 2.9 to now a 10% growth. Yeah, so both is okay, both is still fine, but that's just me as a trader. It's called just being aggressive, basically. How aggressive you want to be, how tight do you want your stop loss. We did take that trade, great, fantastic, boom, take it down to there, TP1. Yeah, we made money. Yeah, and then take it back up because the overall big trend is which way? Pushing up, right? Because market structure, remember, always wins. Because we've got, this is our low, high, low, highs, lows, highs. It's constantly low in that on the highs, creating new highs. All this obviously lows in here. Then again, created a new high again. Okay, so the overall trend is pushing upwards. Okay, so we obviously clearly knew. So this here would have been classed as a minor trend, and this here was a major trend. So you've got obviously minor ones like here, tiny little ones. Yeah, there's a minor one within the big major one. Yeah, so obviously we knew that we wanted to push upwards. So why not let's enter off 1 hour? Yeah. So gold works very well at 30-minute and 1 hour. So we could have got enough here. Yeah, so is that the one we need? No. Okay, so we've entered here of this wick. We come off here. Where would that stop loss go? Just below that wick, which is nice. nice and tight. And where we're targeting, what's the left here? What do we have in here? Anything that we're looking for? We've done 2 hour. Yeah, so we've on the 2 hour. We've got last up before down move. So we target just shy of it. So now we're playing with a nearly 10% growth, 10 to 1. Does it hit? Oh yeah, there you go. Look at that, perfect. Move it out of the way. Yeah. So straight up to there. So we would have had 2.8 plus 9.3. That's about around 12%. And then this is the one I took early on this afternoon. Yeah, so it's come back into this area. Oh, it's getting all messy. Let me just delete all this. So something here that I've spotted. Yeah, there you go. So on the 30-minute, this is why it's important to chop and change. Yeah, so this is last up before the down move. What did that move do? That move was the start of break of structure. It's very, very important to identify which candle was the. Make sure you're zooming in as well, because some people would have said, "Oh no, it's this one here. That broke structure." In theory, that's even tighter. That was your last low. So this was your last up move, or even this one. This up for the down move, which broke structure. Yeah, that ever so slightly, that body closed below this one. Therefore, it's break of structure. Then it pulled back into there and dropped. Okay, so did we get a reaction off? Did we get a reaction off? So all these, I'll just mark them out. Okay, so that again, is just to me, is quite tiny. The bigger the ones are a bit better. Yeah, and there's a tiny little bit of imbalance in there. What's it protecting? Protecting that. Not the best. Yeah, there's obviously a huge imbalance there. But let's just see what happened. Yeah, so that's a perfect example of, so that one was last up or down. Let's go to this one. This is a perfect example of why you should wait to see what is happening when it comes to price action. Okay, so let's just mark this area out. Smaller time frame, what is happening to it. Yeah, it rejected ever so slightly, but after there were 3-minute candles, rejected 1, 2, 3, 6, 9, 12, 15. 15 minutes in, this body closed above the green line. So it's a no-go for me. I would have liked, basically on this green line, let's say, I would have liked the first candle to reject, let's say, the second candle to close like that, slightly below that one. Maybe the third one could even go ever so slightly above. As long as it doesn't close above that green candle, and I would wait, I don't know, 15, 18, 20 minutes, you need to see a distribution or accumulation, which is basically just sideways movements before entering. Yeah, whereas beforehand, I used to just jump in and dive in. Yeah, so as soon as I see that, I then may get a big strong candle, engulfing candle that pushes down, it clearly breaks all these, and I'm thinking, right, now we're good to go. Yeah, and then I may see a candle that wants to come back up, and then back up again, and then drops from there down. That's our profit. So what we're looking for is, obviously, our institutional candle would be, let's say, institutional candle is, let's say, that's green. Yeah, so that's the last up before the down move. Let's say that one is obviously red for downwards. Let's make this slightly bigger. So that was last up before the down move. Price moved away, did obviously loads of candles would be here. Came down, maybe did this, maybe did this, maybe this, a little bit this, back down even maybe, and then came back into here. rejected nicely off the green candle. This candle closed, closed. We got a big, strong candle that broke these 3 candles. It doesn't have to be 3, could be 10, could be 50. As soon as you see break of structure, you know you're pretty much good to get in. Okay, so I'd want to see a rejection, maybe a retest back up, a break of structure, a retest again back up to there, and drop away. So I would be getting in around this area. So this sort of, so this is last up before down move, comes back in, mitigates, pushes away, and does the same thing again. It comes back down, comes back in to mitigate out of this candle now, and then drops. So here you can see, so waited for the first one. You can see that one rejected nicely. I would have waited for the second one. What happened? This body closed above this body. So that's now showing me, oh shit, this wants to go up. Yeah, this closed parallel. This one, don't know what this one was doing. Then just because obviously I wasn't too sure, I didn't, oh, you know what, leave it. Let's just wait. And then just this candle here then closed above. So clearly showing it wants to push up. That one would not be valid, yeah, because let's see another 1 minute what happened. 1 minute. Rejection, rejection, rejection. That one did close. That one did close below these two, but not great. You know, it's just sort of common sense really. So wait another minute, the 3rd minute that these two here closed above these bodies. So as soon as you start seeing that, it's just, you know it wants to start pushing up again. Yeah, I would want all these bodies here to close below these. It closes below, comes back in to mitigate out of here and drops. Try and find you one. There you go, perfect example. Okay. So obviously this green candle was the one I just showed you early on that I'm labeled out. This now is our new last up before the down move. Yeah, so you've got your higher time frames. I think we marked it out on a 30-minute, didn't we? So let's delete that one. That's not valid. So this one now, 30 minutes. Okay, this is last down before the up move. Wait. Could be 2 days, could be 2 minutes, could be 20 years. You just wait. My alarm would be around this area. You have plenty of notice. So as soon as price hits here, I know it's close to here. Yeah, so drop it down. Okay, as soon as it gets to that area, drop it down to the 1 minute for entry now. Okay, so it's come back into here. What's happened? It's rejected off nicely. It's come back up. Look at these candles. What's happened? These 1, 2, 3, 4, 5, 6 candles have all closed below this. People start to panic. They get in here. They get in here. They start getting in here. Wait and wait and wait, because this is going to happen. What happens now? This perfectly, what's this green wick candle do? Perfectly mitigates out of where? This candle. Yeah, so this one all the way back over there, forget that one now. Yeah, because this is mitigated out of it. We now need to concentrate on our entry point. Do not enter off here. You can do, don't get me wrong. So you'll be in a little bit of profit. But what a lot of people do is they see profit, they move their stop loss to break even. What happens? The price comes back up and takes them out. You're pissed off. You think, oh shit, that was a fucking shit trade. I'm not trading again. Forex is shit. Yeah, and it plays with your emotions. So this is a perfect textbook example to me of entering a trade. Okay, so look what happens. And remember, forget the wicks. What happens to the wicks? The wick could literally come, wick here now could literally come all the way up to here as long as that body, the wick comes back down, where does the body close? Was it below or above this candle? Below. Yeah, so now we know, okay, great. We're looking for a downward move. Where did this body close? Below this one. Yeah, so it's showing signs, this is market structure now. If price closes above here and the body was above, I was thinking, well, hold on here. It's obviously clearly trying to push upwards. Next thing, it pull down to create a new low, and push up, new high, new low, and it's just taking me out of the whole trade. Yeah, it's just no good. So it's very, very important to wait. Okay, so what is that from there to there is, doesn't tell me a time, 1 minute. It's roughly what, 20 minutes is it? 5, 16, yeah, about 20 minutes at about. If you don't have time to wait, just delete all this again. If you don't have time to wait, mark that out. Put another alarm on there. There's nothing wrong with doing that. Okay, so whilst this is all happening in here, go make a cup of tea or finish that bathroom or finish the boiler you're doing, or putting the face cover back on the boiler, or talking to your bloody customer. As soon as your alarm goes off, you know, oh shit, we're back in action. Yeah, we're back into that zone. So you're 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, you've got 15, 18 minutes. Yeah, so if you've got time to sit there, fantastic. But if not, like I say, set another alarm on, whatever you think is comfortable. Yeah, so what's in here? It's left because it's pushed up. It pushed hard down, but it left imbalance. What is that imbalance protecting? We know it's protecting that candle. Yeah, so price needs to come back up to take that imbalance out, as well as mitigate from there. So dropped a fairly nice amount. Firstly, so it firstly dropped. So if we entered, could have entered there or there really, either one. Yeah, so if we did enter here, that dropped about 20 pips first, came back up, and dropped 76 pips. Yeah, so this is gold. So if we tested again, so that you could have had a third option to enter up here, but obviously be aware that wick would have most probably taken you out. But what that wick did was, you need to be aware of these things, is what did it do here in the process? Created equal highs. What is behind equal highs? Liquidity. What did that wick do? Ever so slightly, it's done it again. Fucking bastards, the other banks. Yeah, so this is literally the liquidity wipe. Yeah, see that if I put my cursor, if I put my line all the way across, a green candle there. It's ever so slightly. Thanks very much, retail traders. That's retail traders, because they would be entering here. Their stop loss would be above here. The banks know that. Banks literally take them out ever so slightly. And then what happens? What do we get from there? A big, massive drop. Yeah, which retail traders like, oh my God, how did that happen? And they're fuming, which used to be me. That dropped for 81 pips. On gold, that's a lot.
Yeah.
Yeah, that'll pay you very, very well. If I was to call that on my, what do you call it? My, for fuck's sake, I can't think now. My lot sizes, that would have been 81 times. Yeah, that move would have been about 16 grand from there to there in 9 hours. It's a price on gold moves a lot faster in any indices, basically. Yeah, so that took us from there to there, took us 9 hours to make 81 pips, and then CAD JPY, let's say, in 9 hours from there to there, I only did 13 pips, and that took 2 hours. Okay, so 25 pips. Absolute ball ache. This is why I don't trade much of. 53 pips, we're still nowhere near it, and it's still taken 11 hours. What was the gold on 9 hours? Okay, so let's go even further. 75, 80 pips. Starts taking how long? 1 day, 9 hours. So an extra 24 hours.
Yeah.
From there to there on CAD JPY. Yeah, an extra 24 hours because obviously the gold one was 9 hours. 1 day, 9 hours. Whereas our gold moved the same amount of pips, 81 pips in 9 hours. Yeah, so it just pays better, faster. I prefer indices, but they're very, very nasty. They move. Gold it's not the worst one. US 30 is lethal. Gold is oil is lethal. Yeah, that's the most important part. I think you were after entries, weren't you? More than
entries, really.
That's what I would be looking for on entries, and also the shape of a bowl. Okay, so look at that. You kind of get a bowl, good pair of boobs. Yeah, what do you get here? Another sort of bowl shaped, and then drops.
Yeah.
Okay, so entry wise, wait for it to come up into wherever you've marked. Drop it down to the 1, even 3 minute. Really could have worked off 3 minute. Yeah, not the best, but worked off it. Yeah, last up before down. Yeah, you could have done if you wanted to. Not very clean, to be fair, but yeah, sometimes it works best off 1, sometimes it works best off 3. But just chop and change. GU, I think you were looking at on the 4 hour early on. Yeah, you're in here, yeah, 4 hour. That was the candle that we were talking about on the 4 hour. That was the last down. Well, yeah, move. Yeah, broke structure in here. Clearly, obviously breaking up to the upside. Wants to come back down to mitigate out of here. Also, like we did earlier on, we dropped it down to different time frames. So if we did different time frames on this and then looked for entries, let's find firstly the 1 hour, isn't it? 1 hour. 1 hour doesn't make much difference. Let's try 30 minutes. It was 15, isn't it? We're looking at 15. 15. Yeah, maybe this one, isn't it? Big last down to the up. Go across. Yeah, in here somewhere. So again, what do you have? What shape is that?
Oh, yeah.
Your ball. Okay, so our green line was the 15-minute candle over there on the left. Okay, so it's come into there.
Yeah.
It's pushed off. It's not broken structure for me yet. Okay, it's not pushed above here. Yeah, so I would have wanted it to come up to here. Maybe you could retest again and then push up. So nothing has happened. That's all it's doing is creating a high, low, lower high, new low, lower highs, new low, new low, new low. Okay, so what happened then was our reversing points. Okay, and you could have, again, same system. What is there? Equal highs. What are these? Liquidity swipe. Yeah, so this is ST in phase B. Okay, this is again part of your Wyckoff. ST in phase B. ST in phase B basically just means equal lows. Okay, so this is your liquidity swipe. Liquidity grab. Yeah, so it takes these lows out. Then it breaks structure because this is our structure here. It's broken above. So as soon as it does the wipe, it pushes up, it breaks structure, creates a new high-low. In the process, where does this wick come into? What does it do? What does it pop? That needle pops which balloon? This one. We were looking here for entries. What we were looking for? Again, the last down before the up move. It's broken, it's come back, we could have entered. Yeah, twice. So you could have had an entry from here or here. Because your stop loss on this occasion would have been underneath this wick here. Pushing massively to the upside. Would have pushed up into profit for you a little bit. Would have come down, you're doing a little bit of drawdown into the negative, into your stop loss. But then, obviously that's why we put our stop loss below the wick. Yeah. The bodies, remember, they don't close at all below that, what do you call it, that body? Well, if it did do, would hit your stop loss anyway. But you could have had another entry from there. You could have even stacked it if you wanted to, taken one trade from there, another trade from here. Again, stop loss below there. Where are we targeting? I don't know, let's call it 30 minute maybe. Equal sort of recent highs, so maybe there in this area. What does that give us? That's nearly 10 to 1, that's a 7 to 1. Yeah, so I obviously will be looking to target up into here. 30 minutes, 5:15. Yeah, around into here. Yeah, last up before the down move. Yeah, so if you did have the balls to hold it all the way up to there, that's a fantastic 14 to 1. That one would have been 19 to 1. A lot of people would have, going back to the fibs, a lot of people would have gone from that high down to that low. They would have been waiting for rejection from this area and here. Nothing else clearly happened because that is just an internal high. Yeah, that's within our range.
Yeah.
Our big move was from this high down to there. There's our fib lines in here. That's our golden pocket. You can see I marked it out here. What happened? Rejected from there, it's now pushing away. It's selling off slowly. So drop down to 1 minute. Again, this is why it's important to drop down to different time frames, because on the 15 minutes, that body is closed above this body. If you drop it down to the 1 minute, did that happen? No. But these bodies here are ever so slightly than this. But what they did in the process was created new equal highs. It's very clever what the banks do.
Yeah.
So that at some point they do this whole thing fucking all over, day in, day out. So at some point in the future, they've obviously left them there on purpose for people to leave their stop losses above there to be taken out. So it could possibly come back up into here again, maybe tomorrow. The wick could possibly literally go up like that. The body, remember, closes below here and drops. This is what retail traders, your general Joe Blogs doesn't know about trading. And it gets them very, very frustrated.
Yeah. Are you in that trade now, or are you waiting for that to come back, that trade?
Yeah, I've had this one. I've deleted this grey panel. I'll take it back. Take too long. forget it. Yeah, so this was these are my lot sizes. So this one, if it comes back up to here, it's 18 lot size. This would be a 12 lot size. This one I got in here was a 7 lot size. So from around this area, stop loss, but that wick down to, don't know where I was taking it. I think it was, yeah, I think it was there here last down before the, oh yeah, that's when the lamb was there. Yeah, so yeah, it's coming back at the moment. I took some partials early on from here.
Yeah.
It's come back in. Let me just delete that for now. Look what's happened again. Look what it's done. Equal highs again. Yeah, at some point, I would imagine again in the morning, this price is going to do this. It's going to come back up and take them equal highs out, mitigate out of here, and then that's the big move that we want. Yeah, that takes it down. But remember the entry requirements. Yeah, just wait. Yeah, it's very frustrating, but it's something you just need to grasp. Really, what do we get there? Obviously, the opposite way now, upside down ball. Yeah, and then we'll also sell off. It's the ball analysis is quite good, quite helpful. Obviously, on a buys, we're looking for a standard ball.
Yes, if you see all of that, it usually means it's probably go down.
Say again, mate.
If the ball's that way around, does that sort of mean you're kind of looking for it to go down then?
Yeah.
Is that where, yeah.
Yeah, so just imagine your ball like this. It's getting filled with water, let's say, for example. Yeah, this is for a buy, remember. Just obviously the most natural thing for water to do would be to overflow on the other side, but obviously what we're looking for is more of a scoop shape, right, for it to carry on. Yeah, the bowl analysis is just maybe forget about the water, because the water would just typically pour out, wouldn't it, which is the wrong way. Yeah, the bowl is scooped, so if we turn that upside down like we have done now, looking at that, and then for it to drop off, yeah, it's just all the bowl is just change the direction, because if the bowl didn't happen, this here would just carry on going, right? Just keep on going up and up and up and up. It's the same on the way down, 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 down. Oh, like me, I was going down the roundabout, I guess. Oh no, I'm gonna go wrong, the way, and then bam. Yeah, opposite direction. It's just turning, swerving the direction of the market the opposite way. So this is quite tight, this, but it mitigated out. Sometimes you get the most tiniest candles, right?
Yes, that's what I'm trying to do, get the stop losses a bit tighter as well. So
this theory has been mitigated out of once, twice, really, but that in this, well, yeah, this one here actually. This one was the last up before the down move. You could have gone off that one, but was that the start of the move? No, it was this one. This is the naughty point, remember, because here what do we have is pushing upwards, right? Up. Then it broke structure. So who started that? Who started the fire? This little naughty boy here. That's up, and they told all these guys, go and be naughty, and that broke structure here. In here, that big candle there broke structure, came back up, didn't quite come up enough to mitigate out for us to. You could have taken the sell from there really if you were quick enough, because sometimes what I have been starting to realize is, see that wick there, the wick comes into the wick and doesn't always, it's still valid. Yeah, so it doesn't always has to come into the body. It can come, that wick came into that wick here, touched the wick here. So as long as it touches that, it's not the greatest, because we know that most of the volume of the money is in the body. Yeah, and that's hence why it came up. I would imagine further down the line. Yeah, this one didn't quite get in there either. So yeah, this one is pretty much still valid. Yeah, so we just wait. And I think, like I say early on, all people used to jump in here, jump in here, which obviously would have worked out for them, which is fine. But if they were holding it, it would come back up again, making them even more frustrated. Yeah, so we entered around here, around the green. A stop loss was, that's a perfect example of why you need to give it a little bit more breathing space, because that literally just created new equal highs. Yeah, so you could have given an extra few pips, and then obviously dropped nicely. So now we've got this one to look out for. Look how clean it is. Like, sort of, there's nothing that's come back into it so far. There's no wicks in front of it. There's nothing. So we're looking now at this to mitigate out of here. Yeah, so far there's nothing happened. So I would think that's why my alarm is here. Yeah. So, and what does this line up with? The fib levels. So high to low. That for you. Delete that. That one we need. Delete that one. Delete that. Okay, so you can see here this green candle here. That's up, forward down move, which broke structure. What does it line up with? What are these golden things? Golden pocket between the 79 and the 89. Yeah, so you just where is it, 79, 89? You just, you may have your own list. If you want to send you this, there's no worries, but this is what I go off. The more you can take off this list, the better. If you can get 32 out of 32, there's a very good chance you're gonna obviously win the trade. If we can only identify maybe 3 out of 32, you're thinking, do you know what, it's not the best probability. Well, obviously it's, we just also need to take as many of them off the chart as possible. So yeah, it's pretty much the same thing over and over and over again. It's
just that waiting game, and you have to sort of wait until you find that sort of perfect trade now.
That's the hard part, mate. It's just waiting and waiting. So look on the 3 minute now rather than the 1 minute, we get a tighter stop loss. Let's mark that out. That needs to be 3M, 3 minutes. Let's change that line to black. Stop loss will be there, and give it a few more pips. In red. Stop loss there. So we've got an option of either going off the 1 minute, or we could reject off, which is fine. Again, if you want to be safe, if you want to reject off, take a trade off that one, that's fine. Because if you enter here, it does want to push up to there, then you're going to just be in a little bit of drawdown. But if you're waiting for this area, it doesn't reject off there and only off this one, but you're waiting for this one, you've missed the trade, haven't you? So it's kind of catch-22. Do you wait for this one? Do you wait for this one? It's just one of the things, really. It's that one is what, 15 to 1, and then that one is a 10 to 1. So it is a big difference. There's 5% difference. If you're playing with big lot sizes, that could be possibly $5 difference in price. So it's got them marked up already. One there. But you just got to play it by ear. It's whatever you think on the day. Whenever you look at price, go on, mate. Yeah, I just literally wait for it to come into that sort of area. Yeah, wait for a tiny little bit of sideways movement, because if it wants to push up, it'll push up quite quickly. It'll push up quite up there, quite quick. You just wait for it to do a little bit of sideways movements, and then you'll start to see bodies closing and the bodies closing the bodies, and then you're looking at a sell away.
Yeah.
That's pretty much my entry. Whereas, yeah, so number 7, liquidity wipe is quite common. That it does liquidity wipe. It breaks structure. It comes back. It pops that balloon, and then profit. Yeah, take the trade.
Yeah.
So, have you got any other questions, mate? It's sorry to keep you. It's fucking half one.
That's all right, no. It's no, that's probably it, mate. Yeah, because it's just sort of the entry. So I'll probably sort of watch this back and then have a little practice.
Yeah, it's very important to keep on changing through different time frames, mate. Because the 4 hour, as you can see, is massively different compared to the 1 minute. Yeah, so all I use the higher time frames for is to get the overall trend direction, and then mark out your zones where you want to concentrate on, then and just chop it down, and get. A lot of people don't go below the 15 minute. Yeah, so if you want to play it a lot more safe, just play off the 15 minute.
Yeah, it's probably as low as I go is 15.
Yeah, but for entries, most definitely go down to the 1 minute just to have a watch. As soon as it comes into your 15-minute area, chop it down to the 1 minute and just keep on watching it and see what it does. Yeah, hope that helps, mate.
Yeah, cheers, mate. Yeah, have a little practice now and see if I can.
Yeah, it's recorded, so I'll upload it to YouTube for you, mate, and then I can send it over to you.
Yeah, cheers, mate. Thanks for that.
That's all. Hope it helps. Anything else you need, just let me know, mate. I'll speak to you soon.
Yeah, see you, mate.
Okay, mate. Bye.